So give me the state of the business and why that nat gas deal was interesting and sort of what that means for your business this year.
You know, it's interesting. Most people think about natural gas and electric together. But really, the similarities are between water and natural gas. They're both pipe companies. Essentially, you're pushing a natural product, either gas or water, through a main, through a meter, to a customer's home or business, and then reading that meter and billing the customer. The businesses are very, very similar. And it took people a little while to understand that.
So was it a deal about just getting the actual pipeline to have more capacity than to move water, or it was actually you diversifying into other forms of energy?
Well, essentially, it's opening another platform for the company. But the need is similar across this country, a vast need for infrastructure replacement. So the gas utilities, much like the water utilities, need to replace old and aging mains. And so this utility, Peoples Natural Gas, needs about 3,000 miles of main replaced over the next, call it 20 years. So that's significant growth for earnings. It's also significant change, though, for the customer.
Yeah, there are some regulators involved in some of this business, as I understand it.
Absolutely.
So in a private business without any regulation, you say, okay, if I invest this much capital, when will I get a return on it? Because I can charge it for it down the road. Will the rate regulators, will they allow you to recoup the investment to make it worth your while to invest that capital? That's
a great question. And so up front, of course, there are regulatory approvals just to get the deal done. We're in the middle of that right now before we can even close. But then, yes, about 70% of what we spend in gas utility pipe replacement is recoverable in a surcharge because regulators so desperately want utilities to replace this pipe for safety reasons that there's great incentive to make that investment and allow recovery of that investment.
Over what period of time? When you go to the regulator, how long does it take to get the money back? Because again, if you're in a non-regular situation, that's what you're looking at.
Yes. So essentially, we'll be back into rates fairly quickly. The turn is fairly quickly, call it the next couple of years. But the recovery of the investment itself is over a long period of time as that investment depreciates.
You talked a lot about replacing the pipes. What about building new ones and storage tanks?
Yeah, so in the water business, it's not only pipe, but it's also plant, right? When I joined the business back in the 1990s, we were measuring at parts per million. Then it went to parts per billion. Now we're measuring at parts per trillion. So we're seeing things in the water today that we never even saw 20 years ago. And so much needs to be invested in plant and tanks and pipe as well, just for water quality reasons.
So when you make an acquisition, it's not just about getting bigger, it's also making more money, increasing your margin, increasing your earnings if possible. How does that work, again, in a regulated environment? When you buy something like you just bought, how do you say, boy, we're going to make more money for our shareholders?
Yeah, well, important to us. We've been a very disciplined investor over the years. We bought a lot of utilities. But when we buy a big utility, one of the critical points is to be immediately accretive. So in our first full year of operation, call that 2020, we will be, it will be an accretive deal. And that's critically important for our shareholders as you take the long view, and our company is 130 years old now. And so as you take the long view, you're really looking for what will be accretive to our shareholders in the long run.
Okay, where's that accretion come from? Is that cutting costs? Again, often in a normal acquisition, you say, we've got some synergies here, as they say. Got some overlap, can take it. Is that cutting costs, or is it growing the top line?
No, it's really growing the top line. It's we earn on the invested capital. So for every piece of pipe we put in the ground to benefit the customer, it also benefits the shareholder. And so that's how we really earn, by making that investment in pipe and plant. That's how we earn our return.
So are you going to be making more investments, or are you going to be buying more companies?
So really, for the next couple of years, we're going to digest and make a significant investment in the companies we have, water and gas. So I would say it'll be a 2-year digestion period, at least, that will be on the sidelines from major M&A. However, the water market is very active right now. More municipals than ever are looking at privatization as a solution to some of their pension liability issues and their other challenges. And so that market is very active. We'll continue that.
And keep on my theme of regulation, do you actually have an advantage there? Because you don't have a lot of antitrust limitations, because you're regulated to begin with as a monopoly, a natural monopoly.
That's exactly right. And so as we can bolt on other water utilities or gas utilities for that measure, the regulatory approvals are very straightforward, to your point, yes.